Hi, this is Roger Conrad. I'm editor of Canadian Edge. And what I'd like to talk to you about today is the ongoing earnings season that we're going through. Third quarter earnings season. Numbers are starting to come in. And just as we've seen throughout North America, companies are reporting numbers that aren't quite as good in most cases as they were in the third quarter of 2008. Hardly a surprise given what happened in the economy since then. More of a 6% contraction in both the fourth quarter of 2008 and the fourth quarter of 2009. The freezing up of the credit markets, the dramatic crash in the stock market. So it's not surprising that results of our trust, and particularly those that are involved with producing energy, would be worse than they were in the third quarter of 2008, which of course was a period when energy prices were at levels roughly twice what they are today. What may come as a surprise, though, is something on the positive side, and that is sequential comparisons. It's very hard to do these when you're talking about oil and gas producers in Canada, because you have what's called in the second quarter mud season, and a lot of the production tends to be shut in, or not shut in so much as just not done, because simply you can't move the big equipment when the snow melts. But then you get into the third quarter and production begins to pick up again. So again, it's a little bit difficult to do those one-on-one comparisons, but you can certainly do that in other businesses out there. And what we're seeing again is some very, very positive comparisons of third quarter over second quarter. One of those is a company called Yellow Pages, and we'll be writing that up in depth in the November issue of Canadian Edge, which is coming out on Friday, November the 6th, and that'll be available then. But there are also a number of other trusts out there that have posted the same kind of numbers. Again, improvements the third quarter over the second quarter. Now, what does that mean? Well, it means that the second quarter was something of a nadir for these companies. Again, at the end of some pretty dramatic changes in the economy, our picks have managed to weather the ups and downs pretty much, with a couple of exceptions. But what these improving third quarter on second quarter means is, even with the companies that have faltered to some extent, that have had a little bit more difficulties faced over the past year, the worst has happened. The worst has been reached. And some of that price appreciation we've seen since the early part of March, that's continued up through really the middle of October, taking a pause the last couple of weeks. But it's now being justified in the results that we're seeing for these companies and trusts, and that's a very big plus. I think there's a number of catalysts that can really push things a lot higher going forward. That's certainly one of them, I think, and probably the main one. Obviously, the economy has a tremendous impact, even on companies that have been resilient in the face of recession. They're going to do a lot better as the economy comes out of it. So I think we've seen some signs, very good signs of improvement in Canada, and these, I think, will help us going forward. The other thing, of course, is the conversions from trusts to corporations. As everyone who's invested in these trusts knows by now, hopefully, beginning January 1, 2011, there's a new tax regime that will kick in for Canadian income trusts. And basically what that means is they'll begin to be taxed either as special entities, or the underlying companies will convert into corporations. Now, the supposition has been made since the tax was imposed or first announced at Halloween night, no joke, 2006. Certainly no joke for those who have been holding trust all this time and were holding before that. But over that time, the supposition has been that 2011 marks a real doomsday for trust. And so even though we have seen a number disappear, we've seen a number be absorbed, we've seen a number of dividend cuts, we've certainly saw a big wipeout of wealth on that one day, November 1st, the day following the announcement. But even after all that, the supposition by the investment public, and indeed a number of prominent Canadian analysts as well, is that January 1, 2011, it will mark another doomsday. Some people have been laboring under the misconception that businesses will simply vanish at that point. Well, what we've seen is going to happen, and what companies, these trusts are continuing to announce, are that we will see more conversions to corporations. That's the end game. That's what's going to happen in 2011. Pretty much all these trusts are going to convert into corporations. Now, what does that mean? Well, so far we've had 23 either convert or announce definitive dates for converting. So basically, the worst has happened with them. They've said, we're converting, here's what we're going to do, and they've announced dividend policies. Roughly half of those, there was actually no change to the dividend. But for all of them, for the average for all of them, we've seen prices actually appreciate on the order of about 35% since they announced they were converting. In other words, put another way, far from blowing up when they say that when they said they were going to convert and adjust dividends. Again, some of them have, some of them have not. But far from blowing up, even the ones that have cut dividends, even though some of the ones that have eliminated dividends, and that's happened in a couple of cases. But by and large, we're up 35% in the average one of these. So far from blowing up, people who held them through the conversion, have held them to date, are up about an average of 35% in the 23 that have either announced conversions or have actually gone through with them. And this is pretty extraordinary when you consider what's happened to the market since these conversions started happening. The first one was the beginning of 2008. 2008, a horrendous year for Canadian investments, a horrendous year for U.S. investments as well, but a particularly bad one for U.S. investors investing in Canada because you got hit with not only the drop in the average company up there, and it was a leverage drop to the U.S. because Canada's been considered a riskier country than the U.S. So it was a leverage drop, but also we got hit with the Canadian dollar, which fell very steeply against the U.S. dollar. U.S. dollar being, again, like the U.S. market, like U.S. Treasury bonds, the market of last resort, the market that people go to when they're panicked and want to get out of everything else. So with all that happening, a tremendous drop in 2008, we're still up more than 35% roughly on the average of these companies that have converted to trust. So I think the market conditions are improving. I think they've obviously have since March, but certainly we're going to be in a much better environment than we were in 2008 or than we've been in the last 18 months and as we go forward. So I think the period as we go through, as we see more and more companies converting to corporations, I think this is going to be treated as good news. I think they're going to beat expectations again and again and again as they have so far. And I think we can really look forward to, in essence, what amounts to a conversion bonus. And again, I'll be writing about this in the November issue of Canadian Edge. I invite you to check that out. That's all I have to say today. Thanks for tuning in. I'll look forward to speaking with you next time.